We got Walmart numbers after first quarter results. The stock looked pretty good at first blush. Take another quick look at it. But for more, let's bring in Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. It's up about 3%. She's also a CNBC contributor. And the reason she's a contributor is because we hire very savvy, experienced people who use terms like she expects a meet and keep print. Meet and keep print on Walmart. At least meet expectations and keep guidance for the future. Is that what it means? Have I got that right?
That's what it means, and we got that. Although the same-store sales number at 4.5% was better than expected in the U.S., and that means the two-year stack is over 7.5% comp. I mean, they're crushing it, Joe. And we've talked in the past. There are the haves and the have-nots in retail. And you want to own Costco, you want to own Amazon, you want to own Walmart because they are winning and taking market share. And the quarter today actually proves that. And I think they're just being conservative on guidance, by the way.
Kind of get an interesting look into tariffs, too. They go, we're trying to hold. Some of our suppliers are also trying to hold. So you don't get 100% of the tariff effect, at least not immediately. Some of it does get absorbed, and Walmart is probably a poster child of who we should pay attention to on how they handle this.
Absolutely. 2/3 of their business is U.S. and a third is China and Mexico, and they're managing it as best as they can. Everyone's going to feel it, but they're able to absorb it, and that's probably why they're not giving us a lot of guidance in terms of longer term, because we've got to see what happens on the margin front. But they are delivering, and the reason they're delivering is because 72% of their sales is consumables, and the rest is discretionary. And that is such a contrast to Target, which is 50% consumables, 50% discretionary. And that's why Target is lagging, although it is awfully cheap. So I'm trying to give Target the benefit of the doubt of that turnaround, but Walmart is just an easier story to own.
Starbucks is on your radar this morning. Is it working? The stock's looking a little better, I guess. It's nowhere near the all-time highs, but that chart doesn't look good. But
no.
If you go back, 3, 4, 5 years, it's at least above those levels. But they're making investments now. They're going to try and refocus in China, or what's happening?
Well, I'm not surprised that they're looking at for a partner for China, because Brian Niccol, when he was at Yum Brands, they actually spun off the Yum China. So not surprised at all. I think that would be good news. China is a headache. They haven't gotten it right, but it is a growth market. So I think they could probably get a good deal for it. However, I think the company really does need to reset on their products, on productivity, on labor costs. And I think as a result, numbers are going to have to come down over the near term. Long term, we know the CEO is a success story in what he did at Chipotle. But I just think it's going to take time. And the stock is not cheap, Joe.
Even not cheap, even though it's well below some of its best, like Howard Schultz, one of his returns, he got it back updated. So what about the Dick's and Foot Locker deal that the market, it's come back a little, but what was that initial reaction?
Well, I've always paid attention to Mary Dillon just because she's such a rock star. When she was at Ulta, the stock rose 243% under her leadership. I'm surprised that they're selling out, to be honest, but the turnaround has been painful. It's taken a really long time, and they still have a lot left to go. I don't think Dick's needed to do this, to be honest with you. Great management team, great execution, margin improvement and expansion. But this is a small deal relative for them, expands their footwear business, although they do already have footwear. So it's just making them bigger, broader, and more scale. But yeah. I'm not crazy about the mall. 15% of Foot Lockers in the mall.
Right. We got to go, but they're telling me that UNH, you changing your what you think about UnitedHealth Care? Would you sell it now? Would you buy more? What would you do?
Well, it's hard. It's a hard stock. It's not going to work. It's dead money for the time being. I'm not selling it down here. Don't really know what the numbers are going to be because they pulled the guide. But if it's something like 13, 14 times earnings for the number one company in the industry, they'll get it fixed. The new CEO will get it fixed. It's just going to take time because they have to reprice. So we'll have to wait for 2026. But I just don't want to sell it down here, Joe. Not number one. They are best in breed. I don't believe that this is a criminal situation, but it is noisy. And so you're not going to make money in the short term.